Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some more stocks that were in play today. Okay, yeah, first up, let's take a look here at MBOT. Okay, this stock was, it's been heating up, and what we were looking for here was a close above the closing price here on the 21st. Okay, so that's this candle right here, and there was a close above that level today, so that should signal more upside potential. Notice that there was a giant volume spike today, so there was really big volume behind the move, a parabolic SAR bullish flip. The next key level to break is going to be this July 30th closing price. Okay, so that's going to hit that level today and pulled back. If it can get above that level, the next key resistance level to break is going to be the 100-day simple moving average at 165. That's the next target that's lining up with key resistance from back here in June. So yeah, the MBOT chart is really heating up. It's got a parabolic SAR, or it's got the bullish flip, and then you've got the pinched MACD over here. It's starting this bull cross, and then you've got the MACD bull cross on the 8, 13, and 5. There was a bull cross up here on 80X, and then you've got RSI and Fasto both in the bull zone, and they both have more room to run until overbought levels. So the MBOT chart is really hot. Okay, let's take a look at GWPH. It's at 56 right now on RSI, so it's back in the bull zone. So that's very good. It's back above 80. You've got the bull cross over here on 80X. So the chart's really heating back up. There was a big move today above the 100 and 50-day simple moving averages. There was also a close above the middle Bollinger Band. So back above the middle Bollinger Band, we're going to see if it can get a new uptrend going after closing below back here. And so the key levels to break are the 300-day simple moving average at 111.56 and the 200-day simple moving average at 112.32. Okay, it tested those levels today and pulled back. It needs to close above both levels and then turn them into support. As you can see back here, in July and August, it tried to turn those levels into support and pulled back. If it can stay above this 112, we'll call it 113 level, then that's going to signal more upside potential. If it fails to break through this 111, 112 zone, it could pull back and test that middle Bollinger Band at 107. It needs to stay above the middle Bollinger Band to keep a new uptrend going. Okay, let's look at ATNM. Okay, so this stock is starting to push higher. We've got our RSI and Fasto. Okay, so our RSI is at 61. It has room to run till overbought levels. You've got Fasto up here at 80. You've got plus DI breaking out on 80X. And so we've been on this play for a few days now, since Monday on this bounce. Okay, so and it closed above the 50-day simple moving average on Monday. That alerted us that the stock was heating up. And then we want to see that green line there at 63 turn into support. You know, it tested it yesterday. And then also what we're looking for was a break above the sideways channel. Okay, so it's the closing price here and the closing price is here. And so today there was a big move above both levels. So there was a close above the 50-day simple moving average, a close above the top of the channel. So it looks like it wants to continue pushing higher. We want to see EMA 4 at 65 hold. And then notice that there was this big candle over here. So there was this huge drop. And actually I should have the gap in there. There is a gap on the chart, but you've got the 100-day simple moving average is the next moving average target at 93, and then you also have a gap here that becomes a target as well, and so there's a gap here between these two candles, and so the bottom of the gap is lining up with 90, so you have a gap between low of day on this candle and high of day on this candle, and so if the share price hits 90, that would hit the bottom of the gap. If it runs up to about 94 or so, that would fill the gap. Okay, so keep an eye on ATNM. It looks like it wants to keep pushing higher in this new uptrend. Let's look at AVGR here. Okay, this was bouncing today. It managed to stay above 50 after the pullback on RSI, so that is good. You've got a bullish crossover starting on Fasto. That's a signal of the chart starting to heat back up, you know, similar to here where it's crossed over. And then what happened is there was a giant gap up open on the 27th, okay, and the dreaded black candle formed, and that was the signal signal to go to the sidelines. And then it tried to bounce here on the 29th, but it failed to get back above the 100-day simple moving average and continue dropping lower. When it failed to do that, the middle Bollinger Band became this target, and that is the level that it bounced off of today. That's down here at 29. It needs to stay above the middle Bollinger Band. If that level breaks, you could see a drop down here. There's a gap between the high of day on this candle and the low of day on this candle. The gap has been filling to the downside. If the share price drops down here to just a little above 24, it would fill the gap. So if it stays above 29 here, that signals that this new uptrend is still intact. It needs to stay above the 50-day simple moving average at 33. Our next target to break is the 100-day simple moving average again. It's been working on that. If it can get back above that level, that should be the signal that it wants to head higher. Okay, let's take a look at GENE. Now this stock, it made a really nice move today, but check out the long upper wick on today's candle. So it ran all the way up to the 300-day simple moving average and pulled back. That's at 1233, and that is the top moving average. So keep in mind, if the share price pulls up to runs up to that level and crosses above it and then pulls back below, that is a signal to lock in gains. It has to close above that level and turn it into support to head higher. This long upper wick does signal profit taking. It also is what dilution looks like on a chart when a company's selling shares. It did close above the 100-day simple moving average. That was the key level to break. Notice how it had been trying to turn that level into support, so that was good. The next key level is going to be this 100-day simple moving average, basically at or 200-day simple moving average, the red line, basically at $1. It needs to stay above that level to head higher. If it fails to break above $1, you could see it pull back and test that 100-day simple moving average. Okay, let's take a look at ARLZ here. Now, okay, this stock was on this awesome run. So you can see here from August all the way into October, it had just ran super hard from the lows down here all the way up to the highs. It hit $3, and then it pulled back on that candle, and then it hit this 200-day simple moving average at 229. That's the red line, and it's been holding it. It bounced off of it, and so now what we want to see is a break above the closing price on Monday. That's just above 260, about 261. If it can break above that level, that's going to signal it wants to head higher, and then it would have the 300-day simple moving average at 314. That would be our next target if it can break above 260. If it fails to break above 260, it has to hold the 200-day simple moving average. If the 200-day simple moving average breaks and turns into resistance, that's going to be your big signal the chart is cooling down, and then you'd be looking for potential reload way down here off the middle Bollinger Band. Okay, let's look at XXII. Okay, so this is the marijuana sector play that's heating up. It's been in this really nice uptrend. This is one of those plays that you could just keep riding if you're swing trading. Notice how it broke above the middle Bollinger Band. It got ahead of the upper Bollinger Band, and then it came back, held the middle. It rode along the middle Bollinger Band. It made another big run. Then it pulled back, and then once again it held the middle Bollinger Band, and then it rode up along it again, and then now it's heading for that next high close resistance level. We talk about this a lot in the chat, and this plays out on every time frame. So the strategy works for the intraday charts, and we talk about it a lot with the 15-minute chart and a stock breaking high close horizontal resistance to signal it wants to head higher intraday. Well, that's the same thing on a daily chart as well. And so if the share price breaks above this closing price here at 320 and basically closes above that level, that's going to be our clue that it wants to head higher. Similar to you had a high close back here, and then there was a close above, and then that signaled that it wanted to run higher. So if it goes up and it hits 320 and it fails to break that level, then it could create a double top, and then that would signal that it would likely pull back and consolidate and retest that middle Bollinger Band. So heading higher, it has to break above 320. A close above that level signals it wants to break out to the next level. Fail to break it and signals that the middle Bollinger Band would be back on deck. As long as this middle Bollinger Band keeps holding, then the uptrend is intact. Okay, let's take a look at CYTX. Okay, so this chart's really heating up here. If it's in a long sideways channel, so there's this big gap over here. This is the top of the gap up here, lined up with the 200-day simple moving average at $1.09, and then this is the bottom of the gap down here around 54 cents or so, and then the share price pulled back, and then from August until now the share price has been trading in a sideways channel, and so the top of the channel is lined up with this candle here on the 21st of September, and so if it can break above and close above that level, that should signal that it wants to run higher, and then we'd be looking at a potential run up to the bottom of the gap up here around 53 cents or so, 54. And so the key development yesterday was the close above the 50-day simple moving average. That's this green line. If that level holds and the middle Bollinger Band holds, that's our signal that it wants to head higher. So a break above this 40 resistance zone is going to be your clue that it could possibly run up into the 50s. So keep an eye on CYTX. The chart looks like it's heating up. And then, yeah, this is another stock that looks like it's heating up. You know, the chart is not, it doesn't have a pretty chart. What caught my eye was the increasing volume pattern in September. Notice the volume spikes are getting bigger. Okay, so there was a larger volume spike today as there was 2 weeks ago, and then there was and so the volume is increasing as this middle Bollinger Band is turning into support at 168. So if 168 holds, that signals it's in play. And then the reason why I'm showing this chart is because it closed above the 50-day simple moving average, currently at 175. That's the green line. Notice how it closed above that level a couple days ago, but it failed to turn that level into support, and it pulled back. So right here it closed above and then it pulled back, and then now it's back above again. Many times when it closes back above, that signals it wants to head higher. It ran up to the next target, which is the 100-day simple moving average at 189, and pulled back. If it closes above that level, that will be a huge technical development. As you could see, you would have to go off this chart to find the last close above this gold line, and so that would signal that the stock really wanted to head higher, and then you could see a potential run up to the twos and this 200 and 300-day simple moving averages. Notice that back here it closed above in August. The 50-day simple moving average failed to turn that level into support and pulled back, and then it spent it closed above over here, and then it did the sideways thing and pulled back. So it's really struggled with the 50-day simple moving average, so it'll be a bullish change in trend if that level holds and it gets above the 100-day simple moving average. So keep it on the radar. Okay, thank you very much for viewing this video. Check us out at mychartcoach.com and our YouTube channel at mychartcoach.com for more charts and technical analysis.